Hi, my name is Daniela Cambone, and I am the editor at large and anchor here for Stansberry Research. It is my premiere week with Stansberry, and I'm very excited to be part of the team. For those of you who have followed my work over the years, you know I took some time off this summer as I became a new mom to newborn twin boys, but I'm very excited to be back. So thank you for welcoming me back into your homes. To start, I thought I would begin with a topic that's near and dear to my heart, and that is gold. It's a sector I have tracked for over 10 years. So I've brought on an expert in this topic. He's John Doody. He is the editor for Gold Stock Analyst. I've known him for a very long time. John, good to see you. Welcome to my new show.
Well, I'm happy to join you. I'm very happy that you joined Stansberry.
Thank you, John. Well, happy to be part of the Stansberry family with you. Let's dive right into it and talk about gold. Of course, as luck would have it, while I'm on maternity leave, gold just has to be making those brand new highs. I've been waiting for that all these years as it propelled through $2,000 an ounce. The question now on all of investors' minds is, where is gold headed next, John?
Well, it's all clear sky above. There's no former highs that are going to stop us. So it's really a question of what can the market drive it to, and I think it can drive it a lot higher. The stops that really prevent gold from going higher in the past, like interest rates, are not there. There's no return on cash, and people are looking for a way to get higher returns. And gold has been a way that's done that. This is the third bull market we've had in the 2000 era. The first was 01 to 04. Right. The second was 08 to 2011, and now this one. They're all driven by the Fed, and the Fed's done nothing to dissuade me from thinking that's a lot higher that gold's going to go.
So let's talk about your forecast, because in one of your recent editions of Gold Stock Analyst, you actually say the $3,000 mark. So what would it take to get there? Because you saw how long it took for us to break through 2,000.
Well, timing is always the hardest thing to predict in any investment. You can be right about where it's going to go, but you can be wrong about how long it's going to take to get there. And of course, it's taken a long time to get to 2,000. But I think that now we've broached it. Of course, we've settled back a little under 2,000, but I think we've set the stage to go higher. And what's really set the stage is that Powell saying about 2 weeks ago that the Federal Reserve is now aiming for an inflation target above 2% annual rate. And I think that they want to do this in order to make up for the past inflation rate below 2%. Well, you can't turn inflation on and off like a dimmer, a light dimmer, or a stove gas stove you turn up and down. That once they get this inflation going, it's going to be 1970s all over again, when we had double-digit inflation rates, and that's when gold really going to soar. We may be a couple of years away from that, but we don't have any fiscal discipline. We haven't run a balanced budget since Clinton's years.
So a couple of years is not too far away, John.
Yes. Get your gold now.
Right, but a lot of things could happen along the way, right? So we have a presidential election happening. We could have a possible change in Fed chair. So, what would be the ideal scenario here for gold to continue making new highs?
Well, it's going to be simply more of the same. That every politician wants to get reelected. So that means they're all in favor of deficit spending to reward voters for voting for them. And they're all in favor of loose monetary policy. They don't care about balancing budgets anymore. It's get reelected. That's what they want. And recognizing that, investors have to realize what the ramifications for that are. And it's going to be inflation. And the inflation, the way to protect yourself is with hard assets, whether it's gold, real estate, anything that's going to appreciate in value as the money gets worth less.
John, let's talk about Warren Buffett. He is the subject of your September edition of a Gold Stock Analyst. We saw him taking an interest in gold via Barrick Gold, albeit not a huge stake, but still saying a lot considering he really didn't like the metal in the past. What is this telling us about Wall Street's acceptance of gold?
Well, I think it does tell us that there's a greater acceptance of it, but we've seen that already. That Ray Dalio has got a big percentage of his fund in gold, and a lot of other money managers. I think Warren just finally come around to realizing that gold is a good protector, and it's a good way to invest your money. Now, he didn't put very much in, but when he started in Apple, he had less than 1% of his fund in Apple. Now it's 45%. So I think there's plenty of room for gold to grow in Barrick's, in the Berkshire portfolio.
John, finally, with the time we have left, let's talk gold mining stocks. How much room is there left to grow here?
Oh, plenty. We think that just for the top 10 stocks, our top 10 portfolio, just to hit their target prices for $2,000 gold, they'd be up another 170%. So there's plenty of upside here.
Thank you so much for joining us, John. Thank you especially for joining me during my premiere week.
Well, happy to give you the great kickoff that you deserve, Dan. You're really a great addition to the team.
Thank you so much. We'll be talking a lot more often. John Doody, thank you for joining us. And thank you for watching. We'll have more great content coming your way. So be sure to subscribe and follow us on all our social media platforms on LinkedIn, Facebook, Twitter, and Instagram. We're all there. See you soon.